Guys, I'm not happy. You know why? Because there is a stinky bug on my soft light right now. I have to vacuum that bug. Another thing is, you're all looking at my YouTube channel, but you're not subscribed. Why aren't you subscribed? So, there are a lot of people who look at my content, and I give you everything. I talk about investments, crypto, everything. So you don't have to learn, you don't have to read. So let's do a simple game. I will now wait 5 seconds for you to press like. Go. Okay, now subscribe. Have you done it? Press subscribe. Okay, and now share with your one friend that you have. If you don't have a friend, then send it to your enemy. Maybe he will then become your friend. Thank you very much. Hello everyone. How are you? I was on some kind of vacation for the last 2 weeks, so I think I'm quite fresh now, and I believe that we should start where we left off. So if I recall, the last time we were talking about the technology, the blockchain technology, and it was very, very complicated for you, I believe. So you have seen that this is a chain of block, that we have some kind of validators and so on and so forth, but we didn't talk where to use that kind of technology. And today I said that we are going to talk about Bitcoin. I said last time, Bitcoin is not blockchain and blockchain is not Bitcoin. Bitcoin is one specific application of the blockchain technology. Basically, how to get a Bitcoin. So you have seen that within those blocks, you can put different kinds of information, what you want to store, that will be immutable, that will be validated, stored forever, and so on. If you put specific type of information inside, like how much money is sent from what address to what address, from address A to address B, if you put that kind of information within the content of the block, then basically you get a Bitcoin. So ta-da, that's it. You now know what's Bitcoin. Bitcoin is basically an application of a blockchain technology that deals with transactions of the Bitcoin, the amount of Bitcoin between different wallets. And the wallets are represented by addresses. And they are transferring these Bitcoins over the Bitcoin network. That's it. So that's Bitcoin. Also, Bitcoin is a granddaddy, if you want to look it like that, of all the other crypto that you have current in the industry, in the crypto space. If you go online and just search how many crypto coins or crypto, cryptocurrencies you have today, you will see that you have over, maybe 2,000, 3,000 or 4,000, I don't know even how much you have it today, different kinds of coins or currencies. And all of them, except Bitcoins, are called altcoins. So altcoins are any other coin, any other crypto that is not Bitcoin. So the Bitcoin is the granddaddy of them all, and I believe he's here to stay. So if you want to know more about the crypto and about the Bitcoin, maybe the best thing that you can do is to go online on something that I call Crypto Bible, and it is CoinMarketCap. So I'm sharing now my screen. You can see here, coinmarketcap.com is a web page that you can find any cryptocurrencies, any crypto coin that is listed, that is known, and you have on this first page, you have some generic information about those coins, like the name of the coin, what is the current price. So the Bitcoin, the current price is $95.8 thousand. You have what is the movement of the price in the last 1 hour percentage wise, in the last 1 day, in the last 7 days, in the last week. So you can see that in the last week there is a downtrend of Bitcoin that is 1.3%. It went down, the price went down. Then you have something that's called the market cap. So what is the market cap? Market cap is the total worth of the Bitcoin that is currently in circulation. Basically, it's the supply of the Bitcoin. So you have 19.82 million of Bitcoin that have been mined so far. And if you multiply the number of Bitcoins with the price of Bitcoin, basically you get the market cap. So the total worth of the Bitcoin in the markets. So you can see here that it's almost $2 trillion worth of Bitcoins. You can see also the volume. So the trading volume of the Bitcoin the last 24 hours. So it was around 15 billion. So it's a lot. You have also the graph. You can click on this Bitcoin, then you have much more information about the white papers, about the market cap, about the volume, the supply. You have the graph of the price in weeks, months, years, and so on, some news, and so on and so forth. You have the listings of Bitcoin on each of the markets, each of the exchanges, whether are those central exchanges or decentralized exchanges. So you have a lot of information, not only about Bitcoin, for any other coin that you have here, like Ethereum, XRP, Tether, BNB. So you can see here that they are ordered, they are sorted, these coins, by the market cap. So how important and how big are they? Also, what you can see here right on the top of this page, you can see that the total market cap of all crypto is 3.18 trillion and Bitcoin is 1.9. So what does this mean? This means that 2/3 of all the worth, all the money that was put into crypto is in Bitcoin. So that's why Bitcoin is the granddaddy of them all. If you have a new friend or new acquaintance that you have talked to and you ask them, are you in crypto? Most of them are not in crypto, but those that are in crypto, they will say to you, yeah. I mean, I have invested. I don't know a lot of this crypto space, but I have invested into most probably Bitcoin because people find it most reliable. They can rely to it. They have heard something about Bitcoin and maybe for Ethereum and few others, but everyone heard about Bitcoin. Next big thing is who invented Bitcoin? That is the million, billion, trillion dollar question today. So let's say like this. We don't know, at least I don't know exactly who started the Bitcoin, who created the Bitcoin. The only thing that we know is that there is a white paper by a guy named Satoshi Nakamoto. So I will now share you my screen. You can search online for it. This is the white paper about the Bitcoin. It's from 2008 and it describes how this mechanism works, how this validation works, this consensus mechanism, the proof of work, and any other mathematics and cryptography that's behind it. And it's, like you see here, it's been made by Satoshi Nakamoto. Who is Satoshi Nakamoto? Now, no one really knows. So there are at least 7, 10, 20 different conspiracy theory about who is Satoshi Nakamoto. Is he a real person? Is he not a real person? I believe that he's not a real person. I believe that my personal opinion is that it's all prefabricated. This Bitcoin was made on purpose by some organization, institution, I believe from someone that wants to have global power. That's my kind of opinion. But nevertheless, at the end of the day, I believe that it is not important. It is important who created, but at the end of the day, it's not important who created Bitcoin. For me, the most important thing is not who's created it, but what's behind Bitcoin. So what is the technology? Is it secure? Is it immutable? Is it, let's say, can it be easily verified? Can it be easily hacked? And so on and so forth. So those are the questions that I want to know. If the security and the validity of the Bitcoin and the blockchain technology itself is good and it works, then Bitcoin works. You get what I mean. So I don't really care who did it. The only thing that I want to know is, can someone misuse that technology? So bring on a lot of money pour into a lot of money into the system, into this blockchain technology, into Bitcoin, and then scam everybody. Just a rug pull, just collect all the money from all of us like hamsters. We put our money inside, then he pulls the rug under our feet and we all fall down and he goes with our money. That is something that is possible. I'm not saying that it's impossible. It's highly improbable. So the probability of that happening is very, very, very low, but it still exists. So do your own research. You have to understand. Maybe you have seen lately there was something that let's call quantum processing unit Majorana 1, that is the first quantum topological processing unit that get all these qubits and has this computational power like all the computers combined in the world. And that's the future. But can Majorana 1 break the blockchain? I believe no, if you only talk about this Majorana 1. But if Majorana 1 evolves into something, Majorana 100, that will have millions and millions of qubits, then yes, then the current technology of Bitcoin as it is now, it will be, let's say, it will be easy to hack in, let's say, minutes or hours. And then we have a problem with Bitcoin. But guys, rest assured that as we are speaking about quantum computers, also the guys and some smart guys are thinking about how to protect Bitcoin from this quantum computer, from this, let's say, hacking potential. And they're also proposing a new types of security that's going to be built in with technology itself, so it will not be so prone to hacking as it is now, if we are going to continue with the development of such quantum power and so on and so forth. So you have to realize that it's not easy to hack it, and it will not be possible for next 10 to 20 years. And by then, I believe that we will figure out the solution for Bitcoin. So if you don't know who created Bitcoin, that's a good thing and a bad thing. A bad thing about it is that we don't know who is it. Maybe it's some kind of secret service, maybe it's the Illuminati, maybe it's the Masons, maybe it's the US, maybe it's the China, maybe it's, I don't know, Russia. I don't care. This anonymity of Bitcoin, who made it, also made possible that Bitcoin today is not a security. It cannot be security. It is not owned by any company. So there is no, let's say, this intellectual property that is owned by a specific one company in the world, like we have with shares, with stocks. That's why it's good to have this kind of decentralized system, anonymous system that was made for the public use, and it's wide open and anyone can participate in the Bitcoin. Everything is transparent, everything can be looked, so you can download this blockchain on your computer and you can see all the blocks, all of the verifications, everything is open and transparent. You cannot see who owns which wallet. So once more, the thing that is within the block is the address of origin, the address of destination, and the amount of Bitcoin that is transferred. With the fee, of course, for the transaction and the verification of the block. That's it. And you have the link to the previous block. That's the block. That's it. But you don't know who is the owner of that address. So who sent the person to whom? If those addresses are, let's say, registered with some kind of the central exchange, then most likely you can trace, because you have to undergo that KYC process that we are talking so much about. So know your customer, you have to give your IDs and so on. So the central exchanges they know who is the person behind a certain wallet address. But if you didn't register with a centralized exchange and you do some kind of manipulation of transaction of Bitcoins, then you simply don't know who is the sender and who is the receiver. And that's all. Also, because you have seen that 2/3 of all the money in the crypto is in Bitcoin. What does it mean? It means that it is strong, it is powerful. It means that when you have a price going up in Bitcoin or going down in Bitcoin by only a few percent, it impacts all other crypto. So all other crypto except Bitcoins, they are called altcoins. All other altcoins are pretty much following this path. So if Bitcoin goes down 5%, altcoins go 2, 3, 5, 10, 20%, because the volatility of the price in altcoins is higher than Bitcoin, because there is a less amount of money in that kind of in that area of crypto. If you compare it, of course, to the Bitcoin itself. If you have surge of price in Bitcoin, so the price is going up, also all other altcoins. So it's not 100% that every time when Bitcoin goes up, everything goes up. But in most of the cases, when Bitcoins go up, a lot of altcoins, he pulls it with itself, because when people are investing in Bitcoin, they are also investing in other altcoins. Then a little bit about this mechanism of consensus. I have said there are a lot of mechanisms to verify the blocks. So you have this blockchain, you have the blocks, and you have to verify the block in order to put the block into this chain. And there are a lot of methods to do that. One of them is something that's called proof of work. One of them is proof of stake. Then you have proof of authority, proof of history, proof of this, proof of that. So you have different kinds of consensus mechanisms. When we are talking about Bitcoin, then he is the representative, the first representative, and the biggest and the strongest representative of the proof of work consensus. Meaning that in order to put a block into the chain, to verify it, there are a lot of miners, and they have to do these complex mathematical things. They have to calculate those kinds of hashes and so on and so forth, like I have shown you last time. And this takes time. And this takes time in order to verify the block and put it into the chain. So the miners are solving these complex puzzles, let's say cryptographic puzzles, by using computational power. And the first miner that mines this, that comes with this validation code, he will be rewarded with what? With Bitcoins. And I believe today they are rewarded with 3.25, if I'm not mistaken, Bitcoins per validated block. And also you have to keep in mind that not all transactions are one block. So it's not one transaction, one block. So if I'm sending money or Bitcoins to you and you are sending to, I don't know, to John, then those are not two transactions. There are two transactions, but they are not two blocks. They can be put in the same block. As of today, one block size is about 10 megabytes. So let's say it's like a train. So Bitcoin mechanism waits for the block, for the train to fill up with passengers, to fill up with transactions, up to 10 megabytes, maybe even more. And then it does the validation of the entire block. And the validation of this entire block, it lasts for, let's say, about 10 minutes. So you have to have 10 minutes in order to validate the block. So you have to wait 10 minutes in order to verify and to complete that transaction and to send money, Bitcoins, from person A to person B. Is this convenient or not? I don't know. Is it slow? Relatively slow. If you compare it to traditional banking, traditional banks, they can send your money to, I don't know, if you're sending overbroad, then maybe up to 2-3 days you can wait if you're using banks. So it's not that slow. But if you want to pay coffee on some kind of machine or some in, I don't know, in a coffee shop, then 10 minutes is not nice time resolution. So no one will wait on the cash register for you to validate this transaction for 10 minutes. So that's why you have another, let's say, upgrades to this Bitcoin that's called layer 2, layer 3. So the layer 1 is the basic layer, that's Bitcoin. Then you have another type of upgrades, like it's called Lightning Network on top of Bitcoin, that's layer 2, that fixes this problem and does these transactions rapidly. It can have transactions in seconds, milliseconds, and so on. There are also other types of chains, blockchains, like Solana blockchain, that's very fast in comparison to Bitcoin. So if you compare Bitcoin blockchain and Solana blockchain, you'll see that Solana has transactions in seconds, milliseconds, and Bitcoin has 10 minutes. So it's quite, let's say, slow for Bitcoin if we are looking in this crypto space, this speed of transaction. But also this proof of work, this consensus where you do this mathematical calculation and so on, it brings the complexity to the system, and this complexity enhances the security of the system. So as it gets more complex, it's more secured, and that's why maybe the transactions are not fast, but they are more secure. So you have to always have some kind of compromise between the speed and the safety and so on. So you cannot get everything. You have to see if the speed is more important than security for you. Maybe, let's say you have $200 million in Bitcoins. Then if you want to send someone 10 millions or millions or 100 millions of dollars, what's more important? That it is fast or it is secured and it will reach its destination. But in, let's say, it will not reach it 1 second, it will reach in 5 minutes or 10 minutes. So I believe it's the latter, if you're sending that kind of money. But if you are paying for coffee, $1, $2, $3, then why not use some other type of blockchain or other cryptocurrency or another layer 2 solution or something like that. Then Bitcoin is much more suitable for something like a store of value rather than to be used as an everyday transactions to pay your utility bills. Also, when you're talking about this consensus mechanism, there are two main ones, the proof of work and proof of stake. The proof of work, as I said, is all about these miners doing complex mathematical calculations, so they are doing some kind of work, they are spending energy. And proof of stake is another type of consensus mechanism where you have different kinds of validators in the system, and these validators are put into the system by the amount of the token that they hold. So let's say for the Ethereum, if you want to be a validator, you have to have at least, I believe, 35 Ethereum coins staked in your wallet to be eligible to be a validator. Then you have different kinds of algorithm that runs around and gives different validators opportunity to validate the block and to put it into the blockchain. So it's faster, it's less energy, let's say heavy, it's not consuming so much energy, but we have to see whether or not it's less or more decentralized, so you have to keep in mind of that. And you know that maybe you have seen on TV that people started to mining Bitcoin on their own. So they bought big data centers with a lot of CPUs, GPUs, so processing units with big ACs to chill and to cool down the processor. So they are paying a very big utility electrical bill to mine Bitcoins because those mathematical calculations are very, very complex. Now, question for $1 trillion. Does it make sense to mine Bitcoin now? First of all, I would say in early days, there was a lot more sense, maybe 10 years ago, to mine Bitcoin. Because you can do it with your own computer and so on. You didn't have to have so much computing power, so much GPUs and so on and so forth. And you, by the amount of the transactions, sooner or later, you had a chance to mine and to verify the block and to earn some Bitcoins, and the rewards for the mining were much higher then than they are today. But does it still make sense today? Depends. It depends. First of all, you have to know how much it costs you to mine Bitcoin. And what costs? You have to buy computers, CPUs, GPUs, cooling units, put it in some space, you have to rent it or something like that. And then you have to pay for the electricity. If all of the investment that you have made plus the electrical bill are lower than the price of the Bitcoin that you have mined, let's say you have an electric bill for $40,000 and the Bitcoin is $100,000, then it makes sense because you are in profit $60,000. But if you are, I don't know, your electrical bill and all of your investments, they are over $100,000, then that doesn't make any kind of sense to mine Bitcoin. Is it? So you have to see by yourself whether or not you can get in touch with some kind of cheap energy. Maybe in your country, energy is more or less. So you have to see by yourself whether or not it makes sense for you to mine Bitcoin today. And also you have to realize that the one who gets the prize is the one who calculates this and validates this block first. The miner who does it first. If you have lots of computers, then your probability that you will mine, so that you will validate that block, it goes up. But it's probability. It's not a guarantee that you will be the one. So if you buy a lot of computers, it doesn't mean that you will mine more and more blocks and more bitcoins. It means that just the probability is higher. But it can get, let's say, rough if you don't, let's say, mine any Bitcoin in 2 months or 3 months. What now? Then you have to pay electrical bill and you didn't mine anything. So you don't have money to sell. You don't have Bitcoins to sell it for money to pay your bills. So you have to see for yourself whether or not this is the right thing for you. So when we are talking about Bitcoin, we are more talking about like a digital gold, like a store of value, more than a means of transaction. So technology is to use to transact on an everyday life. So it can be used for transactions, but not for, like I said, for paying in your local grocery store or something like that. You have to see whether or not you are a pro Bitcoin guy and you want to keep some of your portfolio, some of your investments in crypto, then you can treat Bitcoin something as a digital gold, something as a store of value. As I said before, everything in this world is demand and supply. So if you have a high demand and low supply, the price is big. So you have to have something that is low in supply, that is scarce, and everyone wants it. Then the price goes up. Bitcoin is that kind of asset because it can only be 21 million of Bitcoins ever mined. We are now at, you have seen 19 point, what was it? 19.82 million Bitcoin, they have been already mined. So we have 1.2 million to go. And it's a exponential function, inverse exponential function. So at the beginning of the Bitcoin, there was a lot of Bitcoin mined, and how we are progressing into time, there are less and less Bitcoins mined. And there will be less and less Bitcoins mined because there is something that is called halving. Halving is a mechanism that is built in with the Bitcoins. It occurs somewhere, let's say, every 4 years. It's not related with the years themselves, so it doesn't mean that if it happened 4 years ago that it will happen in the next 4 years. It depends on the amount of blocks. So in the algorithm of the Bitcoin blockchain, you have this rhythm. Every 210,000 verified blocks, the price for the miners, for the validated block in Bitcoins, it cuts in half. So imagine that 8 years ago, for a validated block, you get 10 Bitcoins. 4 years ago, you would get 5 Bitcoins. And today, you would get 2.5 Bitcoins. What does this mean? It means that if you want to earn as much Bitcoin as you were earning yesterday, you will have to mine 2 blocks, not 1 block, 2 blocks. So double the blocks. What does that mean? That means that you have to do twice as much work, you have to spend twice as much energy, and it gets harder and harder and more expensive to mine Bitcoin. So that's why they are somehow comparing it to gold, because if you're looking at the Earth, at the globe, at the beginning there was a lot of gold, then they mine it. Now it comes to digging every piece of the land, of the sand, filtering out all the waters and rivers to try to find the rest of the gold that it is in the earth. Maybe there is a very big rock of gold somewhere, tons and tons of gold, but we haven't found it yet, and maybe we'll never found it. So we are now doing so let's say we are putting so much energy into finding gold, a little pieces of gold today, that you have to see whether or not it makes sense now to dig gold or not. It depends on how much energy you have to put it. It's the same thing here. And I believe someone said it will be mined, the last Bitcoin will be mined around 2140, something like that. That's the last Bitcoin that will be mined. And then we'll have 21 million Bitcoins, and that's it. There will be no more Bitcoins. And guys, if you want to learn more about certain topics that we are covering in this podcast, like how to do affiliate marketing, how to do trading, crypto, forex, finance, general finance, and you want to learn more about how to escape the ordinary, how to escape this matrix pit and know the information that I am personally learning, then you have a possibility to enroll and to find out more in this game changer application. So the application is also available through the link that is available on my personal page. So you have a link here in the descriptions that you can go and check by yourself.